Hey guys, Taylor with GammaEdge here, coming at you with the market recap for April 3rd, 2025. So today we obviously had the massive gap lower with the news post-market yesterday. And really the open set the high for the day, never able to make it back above the opening print, and then methodical sell-off throughout the rest of the session. So like we always do, let's go over pre-market prep real quick, and then we'll show what our tools were showing us intraday today. So you remember last night's video, post-market, pre-market today, the market trend model was constructed to the upside. No doubt about that. It's been slow and steady higher, especially yesterday. We got what we call kind of a linear up day, also supported with large filter tick buying. Just taking a step back, market trend model is built off the tick index, which is just a measure of real-time buying and selling in the market. What we do is we create something called the cumulative tick, which is a time series of that intraday tick that resets every day. So we create a time series out of that, right? So we can understand multi-day to multi-week trends. We also created something called the filter tick, which registers when there's plus or minus 1,000 tick readings, which those are general benchmarks as being significant, accepted by the market. So we track that as well. So we said that this was constructive in the short term. However, we also noted that the SPX-A and SPX-P options complex were still put dominated to get more confidence in a sustained move higher, as opposed to just, kind of another lower high. We need to see that shift to call dominated. So we were, cautiously optimistic here. But again, then there's the news event after the market closed yesterday, and we obviously got the gap down that we had. So if you came into the market this morning positioned like significantly long, it's a good opportunity to kind of understand where in your process you gauge market conditions. Because from a broad overall point of view, things were still not looking great. If you came into the market small long, based off the market trend model alone, like nothing you can do about that. However, what I will say is, within our kind of single stock community and those scans that we have based off call and put dominated, we've been consistently seeing those defensive consumer staple type names being populated on our bull list and the Mag 7 technology high beta names on the bear list. So if you were long, the consumer staples makes a lot of sense. But if you're long all those, high beta Mag 7 stocks, because that's what's always gone up before, then that certainly was not the spot to be either. But anyways, just want to go over the pre-market dashboards for SPX-A, SPX-P real quick. Again, SPX-A, what I'm saying there is the SPX options complex specific to the SPX AM settlements. This is the cruise ship. This is your monthly or quarterly longer term money is positioned here. You can see we came in, it was put dominated structure, and then we opened significantly lower than we closed, right? Like I already talked about the massive gap down. So we were definitely in deep in put dominated territory. Same thing with SPX, SPXP structure. Again, this is the shorter term PM settlements. This is your, dailies, your weeklies, your 0DT. So shorter term speculators, higher turnover within this contract. And again, massive gap down, deep within the put dominated structure as well. Here quickly for you, this is what SPX 0DT structure looked like in the morning. Settlement was up here, implied open was down here. Again, that gap down happened significantly below kind of where the meat of the 0DT structure was. So we were deep within the put dominated structure to the downside. Again, there's a ton of the expected move is huge. And our thoughts today was, price was going to be significantly dominated by intraday options activity, as opposed to operating within and around our transition zone, right? Typically, that's the structure that we see, but today was not a typical day because of the size of the gap down. And it was so far from those transition zones, which again, the bottom of the transition zone right here is at 56.50, and we gap down to 54.75. So again, just recapping price action today, here we have it here. Opening print is this blue line. Again, you can see we never got close to overtaking the opening print. VWAP is just the white line there for those that like to reference that. And so now, just getting straight into our intraday volume analysis here. For those that have not seen this before, what we do is we measure S&P 0DT call and put volume. So each 5 minutes, we aggregate the distribution of the call and the put side. We find those midpoints, which we call centroids, and we plot those every 5 minutes, connect the dots, and we're able to form trends. Because all else equal at any specific point in time in the market, say it's noon, we can understand what the distribution of the call centroids from the open until noon and we can infer all else equal, speculators continue to behave the way that they have, where spot price is likely to go. Kind of creates guardrails for us. Same thing with the put side as well. And so today off the open, my thinking at least was obviously let the dust settle. Again, we were opening so far away from our transition zone, really wanted to see price action settle down, wait for, our tools to help us kind of infer what, the market was doing. And so just replaying this because we have the entire thing here, right? Like starting out, like throughout the entire session, put speculation was not huge to the downside, right? So like that just is what it is. At any point during the day today, we really didn't see any like material rolling over of the put side. However, the consistent theme throughout today is that we were seeing consistent downward movement via the call centroids. What that means is there is really no impulse, call speculation higher, which is not surprising given the gap down we saw, right? However, the risk coming into the day was, we were in so far in put dominated territory, all those puts, were massively profitable coming into the session. So, some form of monetization event wouldn't have been crazy, but that's exactly why we have the tools, right, to understand if and when that was to occur. And, for starters, again, right, we couldn't even get above the opening print. So until we could have done that, I was not, like fearful of that happening. And then also, going over the market trend model real quick, our cumulative tick again, which measures the intraday action. I mean, there is no impulse higher as well. We started going lower, kind of a gradual move lower. And then, really started to see that selling pressure coming in the afternoon. One thing to note that was interesting is in the morning, right? We had this large move lower with spot price, but we can see that there was not like significant or urgent selling backing that up. So again, that's why I at least was not eager to short the whole in the morning, just because we didn't see that massive, continuation lower with the filter tick, the cumulative tick, or with the put side of the volume as well, right? So I was perfectly content sitting this out, waiting for a better opportunity to set up in the afternoon, right? Because I wanted, at least me personally, the way I trade, in a downtrend, shorting lower highs and then an uptrend, getting long on higher lows. So for me, once we finally got that impulse higher, then we can see it start to roll over. Reason we could see it roll over, and at least I got confidence in it rolling over, is because the call centroid was not, rapidly ramping higher. It was, pretty much still just easing lower all session. The put side again was flat, was not really moving higher aggressively as well. And so those conditions are, perfect to continue to expect kind of sideways to downward actions. Especially if you're a credit seller, this was a great day. Below the put centroid because we weren't moving lower, or above the call centroids as we were having lower highs being formed on the intraday chart. And then not only price action confirming that, but then again what's happening on intraday volume, and then also what's happening in the market trend model, which was trending lower all day. So again, just recapping kind of an abnormal to today, right? Just the size of the gap down and the movement away from the transition zones of the structure. We didn't really operate within the transition zones, obviously, like we did on any other day where it's just been kind of normal price action. But that's again why we have the tools, because these days happen every now and then, and we still want a way, if we want to be trading these markets, to have a way to get a little bit of edge and making sure that we're on the right side of those. So, whether you're, a credit seller or, kind of a directional trader like myself, like there was opportunities today. The big thing was just staying patient, waiting for a with trend setup to occur, and then taking it, or really whatever kind of setup you were looking for. So with that, you have a great evening, and we'll see you for another exciting day tomorrow. Okay, bye.